Welcome, everybody. I'm Raymond Dahlman, and I'm the president of DSA Financial Group. And I want to thank you for taking a few minutes to catch up on the economic update. So let's go ahead and jump right in. All right, so the first thing we're going to take a look at today is how the week finished up last week. The Dow Jones, NASDAQ, actually all of them were up. Dow Jones is up nearly 4%, NASDAQ 6%. International 2, and the S&P 500 about 4.5. So not a bad week in the markets unless you were investing in GameStop or AMC. So I'll talk about that on another broadcast. Little too involved to get into right now. So as far as how the month of January finished out, not the greatest month. The Dow Jones was down about 2%. NASDAQ was up. Really anything technology-wise has been doing really well the last year, and then also the S&P 500 was down about half the Dow Jones. So all in all, January, with everything that's been going on this year, I don't think that's necessarily anything to get too troubled about. I'll get into what I see as far as the longer-term forecast. All right, so looking at what's going on in just the economy. Initial jobless claims have been going down, which is a good thing. Several weeks ago we were up in the 800,000, 900,000 people applying for unemployment. So the trend is continuing in a downward direction, which is good. It's certainly not up at the, what was that? Nearly 7 million people filing for unemployment, at its worst last year. So it is getting better. The one thing that does really bother me is that prior to the COVID outbreak last year, initial unemployment claims were usually in around the 200,000 level. If it got too much above that, that was considered something to worry about. Today we're 3 times that. So yeah, again, we're not working at full capacity right now, so that certainly can be a reason behind that. As far as continuing jobless claims, those numbers are still quite a bit higher than I would imagine most economists would like. Let's see, last week there was about 4.5 million people who have been collecting unemployment continuously. Again, it is trending in a downward direction, which is good. But again, same as initial jobless claims. If we go back before this started last year, the average week to week was about 1.6, 1.7 million people out of work at a given time. And today we're at 4.5 million. So again, those numbers are 2 to 3, 4 times higher than what we would consider normal, based on what's going on currently in the economy. So again, that does give me some worry right now. With all these people out of work and the economy not chugging along at what we would like to have it at. Again, to me, this is something that gives me a little bit of pause. I know I've talked a lot about, the government debt that we currently carry. It's right now in the ballpark of about $30 trillion, or 27.8 trillion. So that, again, we have a lot of people out of work. The government's done a lot of spending in the last year. I think that number's gone up about 4 or 5 trillion since this time last year. So that's, again, what does really worry me. And then when you compound that with the amount of, like I said, government spending that we've been doing over the last 12 months, the money supply has grown dramatically. So this is from the St. Louis Fed. You can just go to fred.stlouis.org and look at this information. The money supply, it's been on a steady uptrend for decades now. But if you look at where we were at, February of last year, we were at about 4 trillion in M1, and today we're at about 7 trillion. So we've increased the money supply by about 3/4 in the last year. So inflation is really my biggest worry right now. If you had $100 in your bank account, on January 1st, 2020, today in theory, it only has about half the buying power. So that's my worry is long term. If this pen cost $1 to buy 2 years ago, and next year it'll cost me $5. It's those sort of things that really have me concerned right now. So as far as GDP, GDP numbers, we did have a pretty significant drop. Q2 of last year, obviously that basically the whole country shut down for a number of weeks. Obviously there's a lot of the economy that's still not open at full strength. The numbers did improve for Q3, and then for Q4 we came in at about 21.5 trillion. So we're below where we were, basically 2 years ago, ending 2019. But it is positive news that this is trending back up in a positive direction. Gross output is another thing that I do pay attention to. It has again rebounded, and not quite to where we were at a year plus ago, but again that is a positive sign that that is again trending back up. So diving back into inflation, this is a chart of gold right now. Looking back, really over the last 20 plus years, gold, talking about inflation, gold is a good indicator to tell, are things getting more expensive? Are they getting cheaper? And, in relationship to gold, you can see, 20 years ago, it was around $400 an ounce, $300-400. When things got really bad back in, about 10 years ago, it peaked out at around $1,900, and then over the last decade, it really settled in around that $1,200-1,300 number per ounce. But with the fears of what happened last year, obviously gold has spiked again, from about $1,400 to just under $2,000 an ounce. I think currently right now it's trading at about $1,832. So, things are going to get more expensive with the more cash that the Fed prints. So again, if in 2 or 3 years, a gallon of gas is now $5, you'll know why exactly at that point. So looking at silver, silver had a really big spike back in, about 2011, got up into the high 40s. But again, over the last, 5-10 years, it's been in that about that $15-16 window. Today it's at over $27. So the powers that be that prognosticate on a lot of these things, they estimate silver could really spike. Same thing with gold. If you look at Bitcoin, I know that's not something that I personally invest for my clients, but it has increased in value quite a bit this year. So not saying that that's a perfect hedge against future inflation, but looking at all these things, gold, oil. Let me click over here to the oil chart. Oil's gone from it dipped quite a bit last year, I guess, with the worry that there was going to be a lot less consuming of oil, so there was a lot of cut back in production. But right now it's at about $58 a barrel. 2 years ago we were up near 76. So yeah, right now oil is comparatively over the last 20 years is relatively cheap, but I would not be surprised to see those figures go up too. So anyway, so that's kind of the picture of what's going on right now. Like I said, my biggest concern today is simply just the inflation that we'll probably see around the corner. How long it's going to take to trickle down into the parts of pins and things like that. it's hard to say. I mean, if it's something where, say you're buying gold, if you're buying gold directly from the miner, yeah, you're going to pay current prices. But if you're buying something where the supply chain takes a long time to get to you, the end consumer, it might take a few years to actually see it. So, like I said, that's my biggest worry right now, is where inflation will go, and also getting people back to work. That's probably priority number 2, at least in my opinion. So that's where things stand right now. I want to thank you for taking a few minutes to watch the weekend update, and please, take a moment to like and share this page, and maybe share with a friend. So thank you, and plan on doing this a lot more often, so I don't know if it's going to be a daily thing, maybe just weekly or every other day. So please give me some feedback, any specific topics you'd like me to drill down onto. I'd be happy to do that, and if you need anything from me, don't hesitate to give me a call or shoot me an email. I'm always here for you. Thank you, and have a great day.